Hi there, welcome back to my channel Training Express. Today is session number 13. But before we talk about today's session, let's have a look at the answer of last session's question. Question was, what would be the journal entry to record depreciation of $150 on furniture and fixture? Answer is debit depreciation expense by 150 and credit accumulated depreciation on furniture and fixture by 150. Okay, today is session number 13, and today we will see how we can prepare financial statements from adjusted trial balance. You would have seen that so far we have discussed multiple steps of the accounting cycle, and we have reached at preparing the financial statements. So today's session talks about the same, how we can prepare financial statements from an adjusted trial balance. So let's have a look at today's session. Today we are going to look at step number 8, preparing financial statements from adjusted trial balance. Let's have a look at this session. Now let's look at our worksheet. It is now final. We have prepared all the adjusting entries. I would like you to focus on these colors. Green color items or accounts, we prepared them in our adjusting entries part 1 session, and the orange color accounts, you can see we made these adjusting entries in our last session, adjusting entries part 2. Once we have prepared all these adjusting entries, I would like you to focus on the second section in this worksheet, which is adjustment section. And try to note that for each debit there is a corresponding credit. And when you look at the bottom, total debit is equal to $19,032 and total credit amounts are also equal to $19,032. Once we are done with this adjustment section, try to look at the last section, trial balance, adjusted. Here is the final balance of these accounts, and look at the bottom again, debit side 35,632 and the credit side is $35,632. Now let's look at our final trial balance here. First of all, we have listed our assets, and all the asset accounts are starting with number 1. Then we have listed liabilities, and liability accounts are starting with number 2. Then we have got equity accounts, and they are starting with number 3. Then we have got revenue, and revenue accounts are starting with number 4. And at the end we have got all of our expense accounts, and they are starting with number 5. And now try to look at the debit and credit side, and look at the bottom. Our debit side is exactly equal to the credit side. All the debit balances of these various accounts are listed in the debit column, and the credit balances of these various accounts are listed in the credit column. And at the bottom we have got a total on the debit side of $35,632 and total on the credit side of $35,632. Now from this trial balance we can easily prepare our financial statements. First of all, we will prepare income statement. So try to note the title of this financial statement. At the top, you will see business name. The second row, you will see the name of the financial statement. And in the third row, you will see the time period or accounting period for which we are preparing this financial statement. Income statement is always prepared for a specific time period. So in this case, you will see income statement is being prepared for the month of January 2020. Now let's look at our revenue, service revenue. In the trial balance, service revenue balance was 23,700. And then from this revenue, we will subtract our different expenses. So if you look at the list of expenses, rent, advertising, salaries, interest, insurance, supplies, and depreciation. Total of these expenses is 4198. And now you can take the difference between revenue and expenses, and the difference will be either your profit or loss. If your revenue is greater than the expenses, it is a profit. And if your revenue is less than the expenses, then it is a loss. So in this case, you can see that Stacy's Consulting has got or has earned a net income of $19,502. Now we can look at the next financial statement, statement of owner's equity. As usual, at the top you will see the business name or the organization name. Second line, you will see the name of the financial statement, and then you will see the accounting period. You will see the beginning capital here is 0 because when Stacy started the business, there was no capital and she introduced capital in the business. Later on, she added additional investment of $6,500. And during the month of January, she made a net income of 19,502, which we just did in the previous slide. And during the month of January, she also withdrew money in the amount of $750. So if you will look at this net effect, you will see that there is an increase in capital by $25,252. So now we will add the beginning capital into this net increase in capital, and our ending capital will be $25,252. Now let's prepare our balance sheet here. First of all, business name, then the name of the financial statement, and in the third row we will put the accounting period, the time period for which we are preparing this financial statement. When it comes to balance sheet, remember that balance sheet consists of permanent items. The nature of the permanent items is that the balance of these items or accounts is carried forward from one accounting period to another. That is why balance sheet is not prepared for a specific time period like income statement. Rather, balance sheet is prepared at a specific time. For example, in this case, balance sheet is being prepared as at January 31, 2020. Now let's look at the asset side of this balance sheet. You would have cash, accounts receivable, prepaid insurance, supplies, and after that you will have computer cost and minus accumulated depreciation. And then you would have furniture and fixtures cost and minus accumulated depreciation. And now you can look at the total assets, $30,456. If you remember the balance sheet equation, it was assets equal liabilities plus owner's equity. So now we can look at the other side of the balance sheet equation, that is liabilities and owner's equity. So first of all, you will see a list of liabilities: accounts payable, unearned revenue, salaries payable, interest payable. So we have got a total liabilities of $5,204. Then we can look at the equity section here. Owner's equity capital is $25,252. And this capital is coming from the last financial statement which we prepared, statement of owner's equity. And if you remember, the ending capital in that financial statement was $25,252. So our total equity here is $25,252. Now you can add your total liabilities as well as total equity, and total liabilities and owner's equity will be $30,456. Try to remember again balance sheet equation. In that balance sheet equation, assets has to be equal to liabilities plus owner's equity. Now before we finish today's session, I would like to remind you of the flow of information amongst these financial statements. First of all, we prepared income statement. The bottom line of the income statement was net income. This net income will be moved to the next financial statement, which is called statement of owner's equity. When we prepare statement of owner's equity, our bottom line is ending capital, and this ending capital is moved to the balance sheet under the equity section. So here you can see a summary of the flow of information amongst these financial statements. At the end of this session, let me ask you a question. As per accounting cycle discussion so far, what is the step number for preparing financial statements? For the answer, please watch out my next session. So this is the end of session number 13. Let's have a look at what we have learned today. Today we learned how we can prepare financial statements from adjusted trial balance. We learned how we can prepare income statement, how we can prepare statement of owner's equity, and how we can prepare balance sheet. I hope you enjoyed today's session. Please stay tuned for more accounting sessions and don't forget to subscribe to my channel. Thanks for watching.